to have you with us. Are your calls on potential weakness in US dollar mostly based on Fed rate cuts and rate cut expectations?
Exactly that. And, we think, of course, we have seen a little bit of dollar downside already. We think there is more room to go into year end, particularly in Q4, just on the back of seasonality, which you see at the end of the year, and, of course, actual rate cuts rather than expectations.
What does this mean for trades on the other side? Because, of course, we have seen that Japanese yen strength in recent days leading to a huge unwind of carry trades. If we continue to see more weakness, does that mean more upside for the yen, and by how much?
Look, I think at this stage, we are looking to continue seeing a strength in the yen. We think it will be gradual. I think for the yen, it's a little bit of a different story. Of course, it's a dollar impulse, but it's also what's happening locally in Japan. We are expecting the Bank of Japan to continue its tightening cycle. We're expecting another rate hike in October. And I think that's going to further support yen strength into next year, particularly. And of course, the quantitative tightening that's coming along with it as well in Japan.
How far along are we with the unwinding? Do you expect just more bounce of volatility as it continues to progress?
Look, I think for the carry trade unwind, which we saw, of course, last week, I think you need three things to take place when you undertake a carry trade. And one, you need to have low volatility. We do know that August seasonally it tends to be a volatile month, a function of a little bit of illiquidity because it's summer months and summer holidays. Many people are away, traders are away. Second point, you need to have expectations of lower rates on the short currency. Clearly, that's not happening. As I spoke about Bank of Japan, they have shifted and will continue to shift higher. And I think the biggest point, and which I thought was the main driver of the shift we saw last week, was the U.S. growth resilience not being there anymore based on the jobs data. I think this is the data. If this continues to, show drastic movements, especially the job market, I think then you're going to see a little bit of more of that volatility in this pair.
What about the political risk when it comes to the US dollar? Do you think as we head towards the election, we know that at least one of the candidates would prefer a weaker dollar? Does the dollar still kind of retain its haven, superiority, or does it start to behave differently?
I think that's a great question, and we have done some work into previous cycles where the Fed was easing, and at the same time you had U.S. elections, and net we had seen that the Fed policy tended to dominate moves in the FX. And if you go back to, if you look at the Trump era, Trump 1.0, soon after he was elected, we did see dollar rise. And that's because it was unexpected win at that time, non-consensus. But then again, at that time, throughout his term, the Fed started raising rates as well. So we had dollar strength, not just because of the trade wars. Of course, we had a little bit of that contributing, but then we also had that the strength in the dollar coming from the Fed hikes as well. So I think what the Fed does may be a little bit more important into the environment as we go into next year, depending on, of course, who wins the elections.
Let's talk a little bit about China. Of course, very consequential who wins the election in the U.S. for Beijing as well. At this point, they're struggling with their own market gyrations with that incredible bond rally. We've now seen measures to tame that rally right now at a time when we're also expecting interest rate decisions, not to mention activity data out of China as well. When you take everything into account, where is the yuan going?
Look, I think we continue to see, we have seen yuan benefit on the back of a weaker dollar. We continue to see a stronger yuan, and I think it's going to continue to see the impulse coming in from the dollar and how that links up. And I think, to some extent, I think the People's Bank of China might be a little bit pleased to see that they do not have to come in and intervene. We do know that 730 was the line in the sand last year, and I think we're well far away from that at this stage, in which PBOC will have to be concerned about.
Mahjabeen, always great to have you with us. Mahjabeen Zaman, who's a head of FX research at ANZ. More ahead on the Asia trade. This is Bloomberg.